Hello. Hello. Can anybody hear me? Who am I talking to? Can everyone just say hi and let me know you're here? Hello. Who's this? Can you just say hi and introduce yourself and let me know if you can see my screen? Okay. Anyone else? Hey, how you doing, man? It says there's 9 people here. Can you let me know? Can you just see my like trading charts at the moment? Okay. Do you think I'm gonna get wiped? I think market makers might make one last push down to like the daily pivot. So might have. Yeah, we'll see. I'm not sure if this is the spot. Let's look at it in the 1 minute. Is there anyone else here? Mitch? Is it me you're looking for? So I think, you know, I have this like well, that's little M1 demand that's broken the structure, okay? And it's retesting, but it's not very convincing that it's gonna take off here, eh? So, okay, can we see the volume? No, because I haven't set it up. Let's stick a. Can everyone let me know what can you see now? Can you see a volume chart? Okay, no problem. Yeah. Yeah, gotcha. Da, 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 da. 0.22. Lovely. Okay. Alright. You can see my screen. Sorry, I'm just gonna check Discord. It looks like there's 11 people here, and people can hear me, so that's good. So, sorry for the delay. We just like entered this position. I was waiting for this one all day. While that's going, I'll just tell you about some of the other trades that I took today. They were just very, very minor. It was actually these guys. Okay, run above daily open, and it was into this. I've deleted this supply zone, but you can see that's the accumulation supply zone. So we had a run on the daily open. We had some footprint confirmation, so I'd scalped it for like, I don't know, 15-20 pips. Then did the same on the retest, but I didn't write it down. And then entered here, and got some pips off yesterday's high, but I didn't kill it like Alex and write it all the way down. Just, I don't know, just because of the desire to lock in some pips. And now my idea is that we're going to go long from this kind of weekly pivot area. Sorry, this isn't actually to do with volume, I'm just kind of talking about the position that I'm in. You see, this is a kind of flip zone, and we have this demand zone. So we'll see, I could be wrong. It seems to be going the right way though. I think I explained that in Discord, but we'll keep a close eye on it. It really needs to make a strong breakup. I'm not totally convinced about it yet. So let's have a look at the footprint chart, see if I can just... No, I can only really show this chart. Okay. So this is going to be pretty basic, like just the basics of volume, because cable traders, volume, mindset, price action, key levels, game theory. Volume, I would say, is only about 5% of it, but still a very, very important part. I started learning volume probably about September last year. I was trading supply and demand, basically, using just market structure, supply and demand, just kind of basic, you know, price action patterns to enter trades. I was doing okay. Definitely had some mindset issues, but I could tell, you know, with supply and demand, a lot of the zones fail, and I could tell there's just a kind of missing piece of the puzzle, so I ended up joining the volume traders. So quite a few of the people in this group came from the volume traders as well, so that kind of introduced me to cluster delta and all the volume tools. But my style of trading is very different from Seb's. I tend to, if you watch my videos, I tend to catch the bigger swings and use like market logic and like intra-market analysis to try and capture, you know, maybe the bigger kind of 50 to 100 pip moves, or, you know, at the current market conditions, it's like 200 or 300 pips if we get it right, but haven't managed to catch any of those yet. So introduction, market profile, and markups. So tell me, what screen can you see? Is it still the chart? Okay, I just need to figure out how to switch screen. Hold on. Options. Does anyone know how to like switch what screen you're showing more? Let's see. Which part, sorry? I've got the screen button, share your screen. Change windows. Okay, perfect. So. This is just, can you see a Word document at the moment, basically, with volume profile on it? I'm gonna try and zoom in. Okay, so this is the weekly volume profile. This is just showing you every horizontal level, how many contracts were traded at each level, okay? And this light gray shaded area, it's called the value area, okay? And that's where about, you can change the settings on this, but it's about 70% of the contracts are traded within this value area of the week. And the red line shows the ones that are kind of unusually large, and the largest line is referred to as the point of control. Okay, so you can see, you know, price kind of drifted down here, and we talked about this in the video, and it shot up, touched the point of control, and dropped. So it's kind of, It's a proxy for both supply and demand and support and resistance. And you can see same down here. It's kind of the center of gravity. You have most of the contracts traded within the value area, and the point of control is the main. It's the big daddy. It's the level where all the contracts are traded. Most of the contracts. So you can see it kind of shot up and acted as a support here. So we'll get to this in a minute, but how do you actually translate this into trading? And this is the daily as well. So same thing for every day. You've got a point of control and the value area. The issue is when you get to the current day, it's not very useful because when you start the day, you don't really have much data, so it's useless. You'll maybe have a point of control, but you know, it's not very usable because you know you've only got a few hours in the day. So anyway, does that make sense? Just the market profile in general, what it is. I mean, it's a pretty easy concept, but we're using futures volume, which has to be borne in mind because we, I think 99% of us trade spot, and this is from the futures market. Now we can use, if you go into trading view, you can get tick volume, and some people will say tick volume is good enough. It's okay, basically, but it's not really a substitute for the actual real volume, the actual number of contracts traded at each level. It's far superior to try and use this, even though it's two different markets and we have to apply kind of a fudge factor. See how many people are here. I'm gonna change windows again. Okay, how to set up your screens. So we'll do it from scratch. Can I ask, is there anyone here who hasn't set up their volume screens? So everyone has, I guess. Yeah, I'll show. Basically, I have a laptop and a desktop, and I use my. Sorry. Yeah. 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 So I'll show you how to set up the screens that I do on MT4, and then we'll take the market profile levels, and then I'll show how they translate into my markups. So we'll do a quick screen setup first. And do that, smidge. So and the market's shooting up, which I'm really pleased about. So I don't have to worry about that. Got quite a lot of contracts going on that. So can you see my MT4 terminal, everyone? Yes, sir. Yeah or no? Yeah, cool. Good stuff. So I'll just show you how to set it up like I do. First we'll have, you just open a GBP USD chart window, okay? And then we'll apply the footprint. I've already done this. And set it to bid ask here. and that's it, and you'll end up with the footprint chart looking like this. Okay, and we'll get into what these numbers are in a minute, but I'm just going to show the screen setup that I do. Then we do I do market profile. Inputs I'll leave as default. Okay, I just leave the defaults as is. I'm going to show the weekly to turn sync profiles off because that averages them. Just set it to off, and then you can say whatever. Set it for 5 weeks back, and then we can zoom in and you know, set it to whatever colors you like. I don't like having a grid, for example, so I'll get rid of that. And you can see where we're at right now on, let's say, the M30 chart. And we're outside the value area. We're actually just kissing the top of the value area. So this is where 70% of the contracts have been transacted this week. And that's the point of control, the weekly point of control. Which is the level where the highest amount of contracts were traded. So we can make an assumption, you know, a lot of the contracts were traded here, 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 and here. And we have this big move up. And can zoom out and we can see it. That's last week's value area, last week's point of control. Okay. And then we'll set up another GU window. Stick it on M1, and I'm just gonna change the colors to like what I like, but this is personal. You just have it however you want. White, light sweet gray, bar up. I really don't like green, so I'll go black, bar down, black, and bull candle, white, bear candle, black, line graph green, line screen, blah 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 blah. Okay, fine. Get rid of the grid. Change the candlesticks. Okay. This is the way I quite like a monochrome. Other people like colors. Do it however you want. And one of the most important indicators that will have volume. So this tells you each candle and you can see how much volume is being traded in each candle. You know, so you can go ahead and see that was a low volume candle. And generally, like, if it's high volume, usually there's a lot of like power behind it. A lot of people transacting in that candle, and you can say, like, say we're trending up or trending down. Pullbacks tend to be lower volume, so if you see the volume decreasing on a move, you can kind of see that it's a pullback. Like low volume, this is just a pullback to go down. Higher volume means there's something happening. I can see a big pin bar developing here, so I'm just going to check out the screen. 2 secs. Oh, really? I didn't know about that one. What was the news? Bloody hell. Core CPI for USA or? Oh, producer price index, PPI. PCE. What's up? Let me just check. Hold on. Oh, right, Friday. Oh, core PCE, interesting. Okay, well, it seems to be in our favor, so good. I mean, news to me. I never check. I mean, I preach, like, be aware of the fundamentals, understand them, but I never really look at the print. You know, like, oh, is it going to be in our favor or not in our favor? I believe the technicals are just going to play out, and you know, it's going to do what it's going to do. So yeah. So yeah, have a volume indicator. If you like, put the delta indicator on as well. I know some people like this. Me personally, I don't really use delta. I haven't found a big use for it. So although I've had it on, I'm just gonna like minimize it for now. But the volume one's the main one, and then I like to put the imbalance indicators on. And I put 2 of these on. And select zero side. Have one at price equals bid. Have one at price greater than bid. And this will show you horizontal imbalances and diagonal imbalances. Now, I'm undecided on which ones are better. My previous teacher taught horizontal imbalances. People like Trader Dale talk about diagonal imbalances. I observe both and find them both fairly effective. So zero-side imbalances are just areas of price that haven't been filled by the other side. Okay, so let's say, let's find a big one. Well, actually, that was quite good examples. Let's say this 22.0. Is that 22.0? Yeah, it's 22.0. Yeah, it's that one, and it kind of just touched it and bounced. So you can see price tends to be attracted to imbalances because it's kind of like nature abhors a vacuum. If you have a price level where there's buyers and no sellers, the price algorithm will tend to gravitate towards it and, you know, fill the other side of it, as it were. The other thing to note is zero-side imbalances are also a proxy for structure, either minor or major. So they act as support and resistance even if they've been filled, okay? Yeah. Exactly. Yeah, 477 is an imbalance. But what we tend to notice is when a structure is broken, we get a zero-side imbalance. And these tend to be the most powerful ones. So yeah, like a 477 is an imbalance. And it may be reached and filled, but the zero-side ones usually form when structure is broken. So those are the ones we tend to look at the most. Now you can get the indicator and change it to how do you do it? You know, switch off zero side and just say, you know, you want to look at certain ratios or whatever. But I've found zero side to be the most effective. That's how I was taught. So I've got 3 windows so far, one with the footprint, one with the market profile, one with the just the candles chart and the volume, and then one more chart. And we're going to be putting the footprint on again. We're going to stick this on for M5, and we're just going to look at volume, and this just tells you the amount of contracts traded at each level. And we're going to be looking at volume clusters in the future. I'm going to give one example today, but basically they're like, you know, I was referring to point of controls and the weekly, you know, as being powerful levels. Well, you can have like many point of controls within the general price action as well, so that can help you refine your entry, and we'll show examples of that today and in future as well. So I'm just gonna change screen again, hold on. Back. What screen can you see at the moment? Is it the general trading view chart? Oh, fucking hell. I do apologize, I've never done this before, so it's alright, we'll go to change windows. I guess that's what you click on. And we'll go to the chart window again. Just go live. And because we're in positions, I have to keep kind of half an eye on this. And it seems to be going okay. It's a little bit choppy. I'm reluctant to put my stop at break even at the moment. Even though it's diving. But I think what's happening here is a retest of a trend line. So there will be people shorting this trend line. Okay, you're seeing this as a breakout and going short. My own conviction is this level will hold and we'll go bullish, but we'll see. I may be wrong. I'm currently just in about break even, so we'll see. Slightly in profit actually. I'll have to keep a close eye on this during this, because if it shoots down, then we're in big trouble. But what are we gonna say next? How to set up your screens. I'm gonna show markups first, and how I approach like markups. And you know, you're starting with this blank screen. Somebody tell me if the market does something crazy, by the way, like if it drops, because I'll need to I'm kind of monitoring a position while doing this as well. So you can see, what was that, London high. But what I tend to do is take the point of control, say for the week, and also mark this up. And I mark up the value area high and low as well. So, point control, can somebody tell me the point control for the week? I've got 1.07683. Is that what everyone else has? It should be the converted version. 1.0770 I've got. Yeah, hold on. Yeah. Give me a second. So you try to change screens on this. It's a bloody pain in the arse. Change windows. I don't seem to have the option. Like, I get screen 1. Okay, I can change that. Then why is this not working for me? Is this just showing like my Windows screen at the moment? Word document. Okay, that's fine. So you just take the price. Yeah, you just take the price that's shown there and transpose it onto your trading view chart, basically. That's it. It's only, no, it converts it to FX on MT4. Correct me if I'm wrong. That's my understanding, is that's it converts it to the FX price on this screen. Yeah. 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 The only thing where it doesn't is, sorry, it's very hard to change screens here, but say you're looking, can you see my MT4 at the moment? Or no? So you see these prices, that's the futures prices. So yeah, that's the ones you have to be careful with, okay? Because the price isn't 1.1094 at the moment. It's let's see, it's, you know, in 89, so there's like a 5 pip difference. And we're nicely in profit, which is really good to see. So yeah, I just take the value from MT4 and transpose it to there, so that's the weekly point of control. And that counts as a key level. So key levels to me are high probability reversal points, okay? So session highs and lows, daily highs and lows, weekly point of control, you know, whatever, Frankfurt Open as well. I've listed all the key levels in the course. So these are like the high probability reversal levels, and then usually I look for a trading level as well. So say price comes down to the weekly point of control, even like this FVG. Can you see my trading view chart at the moment? You know, let's say price comes down to the weekly point of control, hits this FVG, and then you know, does this, then breaks structure, then comes back and hits an imbalance, and then you can enter. That would be like confirmation 2. So yeah, that's like the basic idea. So you can use daily point of controls as a key level as well, like previous days. That's fine. I prefer weekly. I tend not to work with the daily point of control, but I do mark them up. I also mark up the value area high and low. So I'll just check right now. Value area low is 1.06567. So, yeah. And I don't use that as a key level, but say we're trading in a range, and say for the sake of argument, the value area high is here and value area low is here, and we're trading in a range like this, you know, we're doing this kind of thing. and then we go outside of the value area. This to me tells me we're kind of we can use a kind of mean reversion strategy, and since we've crossed a key level, you know, this is ripe for trading, because we're outside of where all the transactions are being done. Okay, price is attracted to volume. That's what the kind of golden rule of things. It wants to be where the volume is, where all the business is being done. So if it comes outside of the value area while we're ranging, it's gonna tend to want to come back in. It'll be coming out for a reason, probably to collect liquidity. So it's gonna, you know, want to come back in. So I mark out the weekly point control, value area high and low, and that's pretty much all I take from the volume profile. And I do it for previous days as well, and just try and use a bit of logic. So sometimes you'll see clusters on MT4, and I'll call them like high volume nodes. So say it's here. And you'll sometimes see me do something like this, you know, HVN, where it's not quite a point of control, but a lot of volume is being transacted there. I don't actually know if this, I'm not looking at MT4 at the moment, I'm just using it for the sake of an example. So let's say you do have a big volume spike on MT4 here. I'll mark that up because it will tend to be a support and resistance or a supply and demand, if that makes any sense. Are you with me so far, or am I like talking nonsense? Okay, I'll take the silences. I think the silences are good. Okay. So yeah, that's all I take from market profile, value area high and low, and weekly point of control. And I'll look at the daily as well. It's kind of hard to show you when I've only, you know, when I've got like 2 or 3 screens going. I'm just looking at our positions, and we're nicely in profit, so that's good. I'm just gonna double check on them. You can see my trading view screen. So you can see, can you guys see my trading view screen or no? Anyone? Okay, so I entered here on the copy trading account. It kind of fucked up, I don't know, because I'm trading a demo account linked to a live account. Something went wrong with the server, and I ended up like trying to enter orders around here, and like my demo account crashed or whatever. So I ended up, you know, placing orders around here and going into a bit of drawdown, and not doing it with precision. And that was, I think, that's something we're gonna have to test. I think it's because I'm using a demo account linked to a live account. Mitch, can you comment on that if you're there? Mitch, are you there? Anyway, he has more insight into that. I think what I'm going to have to do is use a live account and link it to a live account, because I think the demo is just kind of not really treated as a serious thing by IFC. It's just like, you know, I don't know, lots of people use it. Like the specific one, I don't know. Is well, it was fine. It's been working fine. Generally, it was just at this moment around here, I was starting to place orders, and everything crashed, and I had to reload it. I think it's because maybe I had I opened a second terminal and I logged in demo account and that. So our orders are generally in this kind of down move. So, you know, Mitch criticized me for trading on expectation, because I had high conviction we were going to reverse in this kind of weekly pivot area outside of this trend line. If we look at Dixie, I thought it would fake out this trend line and deflect off this H4 FVG, so that, you know, this arrow is always indicative. This is not like the precise level where I'm saying when I do an arrow like this, It's just to tell you that this is the kind of general pattern that I think is going to happen. And this comes down to the mindset and the price action kind of logic side of things when you're trading. Trading isn't, I mean, you know, there are some futures traders who just look at the DOM, you know, the depth of market and the footprint and make trading decisions off that. That's fine. I don't think you could do that with cluster delta. There's too much lag. So it's not very good for that, but I'm not a pure volume trader by any means. I only use it for confirmations and doing basic markups with the point of control and the high volume nodes. So say it's a high volume node, point of control, value area. That's all I really take out of it in terms of markups. I'm gonna switch to just some examples now. Mitch, are you there? Mitch, hold on. I just need to take a break for 5 minutes. Is that cool? Can just pause things and I'll be back in like 5. Is that right? I'm just like totally parched. I realized that I don't have like a drink of water or anything, so I'm just gonna grab something. But in terms of what we've covered so far, introduction, market profile, markups. Okay, I'm just taking point control, value area, high and low, high volume nodes. How to set up your screens. I don't use much. You know, 4 screens. You know, footprint, market profile, general chart with volume and imbalances, and just the volume as well. Okay, I'm gonna be back in like 5 minutes, so I'm just gonna pause things if that's cool. You can get back to trading and we'll talk in 5 minutes. Hello. Sorry, I just like connected to the webinar on my laptop, and now I'm trying to like do it on this my desktop, and it's like just try to figure out how to log back in. Nah, I'll be fine. Let's just have a look. I think it's okay. Got like a little demand here. It's what? Hold the phone. Can anyone see my screen, or like what can you see? Nothing. Okay, good. Start the stream again. Okay. It's because I joined the webinar on another computer, which I shouldn't have done. Let's see. Volume webinar. Share your screen. Okay. Boom. Go live. Yeah. Fine. Bills in control. Where are we targeting? I know this looked kind of rather compression like, and it looks like we're bouncing off this trend line. I call bullshit. Bouncing off this trend line. I don't believe it for 1 second. Go on. Challenge me. Tell me I'm wrong. What do you mean triangular? Like, well, can you see my screen? Yeah, I know what you mean by a triangle, but a wedge is something different. A wedge is looks like that. Okay. And then you have, that's an ascending wedge, and it's basically the same thing as a compression. And then traditionally you would get some kind of breakout, retest, and then go down. And it's actually a pattern. You know, compared to other technical analysis patterns, a wedge actually works pretty well, because you've got compression, supply, break of structure. You know, it makes sense, and then mitigation, and then go. It actually works okay as a technical analysis pattern. And we're just looking at GU, and it seems to be deflecting off this trend line. I'm not too worried at the moment, but we have to be cognizant because they're now in slight drawdown because of the execution problems. So let's just keep a close eye on this and try and work out where the real demand is. So we've got this level. I really need to clean this up a bit. Yeah. I know what you mean. It might take out this low. We had a good little run there, but I don't believe we're just gonna deflect off this trend line and go back up. But what might happen is we might test the daily pivot. What do you think? What's the volume looking like? Let's have a look. Volume's very thin. Volume is extremely thin at the moment. I guess we have to wait for NYSE. I'm gonna hold this position. I'm not too worried. So, introduction to reading footprint. What can you see at the moment? Can you see my MT4 screen or no? Okay. Okay. So, I mean, don't be scared. I mean, volume was one of those subjects that I was a bit scared of, because when you see numbers like this, you're like, what the fuck is going on? You know, like, there's no way I'm gonna make any sense of this. And the first thing to say is, you know, you're not really looking at this all day. I've got this running in the background, so we're not looking at every single number. We're only interested in this for confirmations, but essentially what you have, let's say we're looking at this candle here. It's 1548. The left side is the bid, the right side is the ask. Okay, so the bid contains market buys, so aggressive buyers, it's sometimes called, people who place buys at market. But it can also be limit sells, and we don't know, we can't tell if that 23 is an aggressive buy or a limit sell, so we have to use interpretation, essentially, you know, based on where we are in the charts. This green part indicates the body of the candle, outside is the wick, and at the top we see the total number of contracts dealt in that candle, in that M1 candle, and this is the delta. So 48 indicates that there's more contracts on the bid side. Is that correct? more contracts in the business. Sorry, sometimes I get confused about that. 48. So it's a positive. It generally means more buying. Okay, if it's positive delta. Sorry, just give me a second. Like delta on its own, I don't tend to use. I don't really talk about it in the course. I haven't found a huge use just for like reading the delta. Maybe others do. I don't know if you use it, Mitch. Yeah, it can be good for grabs, but yeah. So, what I mean, the first thing we can think about is the imbalances. So, let's try and find like a zero side imbalance, like a good one. We're generally looking at the ones with a big differential. So like a 0.2 or a 0.3 is less powerful than say like a 0.50. Try to work out, was that the news candle, I guess? But yeah, imbalances can be used for like support and resistance and entries, essentially. What else did I want to say? I mean, the main two things we're interested in are imbalances and absorption. So you can see the power of an imbalance there as 0.22, and it's hit exactly. And then, you know, price goes up. So we use them as a proxy for support and resistance quite a lot. One of the confirmations that I use, let's say you get, I gotta switch screens again. Say you get something like this, like a V-shaped reversal. You get these quite a lot. So I described these in the course. Sometimes you get, let's say there is a key level here. You know, Asia low. Pretend that's Asia low, and you get something like this. It just goes straight up. So, and you know, you feel like the move is kind of left without you. This is where footprint can come in handy, because if you see a lot of bullish imbalances form, say 2 large bullish imbalances form here, just for example, just for the sake of argument, say like a 0.22 forms here and like a 0.30 forms here, it tells you buyers are in control. And you can use it and just wait for the retest of one of the bullish imbalances, and that's your entry kind of thing. That's what I call confirmation 1. So that lets you get into these V-shaped reversals, if that makes any sense. Confirmation 2, so that's kind of like a break of structure. And a retest, and I show that. I'm gonna show. Can you see this Word document? No. You can see it now. Okay, so sorry, can you see this Word document? Yeah. Right. So you know I described setup too. Very basic supply and demand setup. I'm sorry you can't really see it in this picture, but you have a supply here, which is broken a horizontal structure. That's structure, okay? So supply breaks structure and then comes back to retest. Confirmation 2 is you have a break of structure. That's in this bear candle. You can see its structure here, and you know, you might not be aware, you know, you can't really see that structure just looking at it in a bear chart, like a chart with no markups. You might not see that that's a structure level, but this 18-0 forms, that's the break of structure, and then you get a retest. It'll always like come back to refill, like something like an 18-0 or a 20-0, and that's your entry, and you can do that to the pip. If you look at the last video that I showed, I kind of show that as setup 2. So setup 2 is very simple, is you have a test of a level, break structure, retest the imbalance, and then that's a confirmation, okay, from setup 2. And what I'm starting to introduce is volume clusters. So you can see another setup to here. Okay, you had some run on liquidity, and then back into the demand zone, and then you had this volume cluster shown here. It's like a high volume node, basically a mini point of control. So this, I monitor these in supply zones, so accumulation clusters. And you say, okay, where's the volume transacted? Where's price going to be attracted to? Draw a line, and when price comes back to it, you can just buy or sell if it's the opposite, if that makes any sense. You can see here, that's where all the volume was. This is not the best example in the world, but it's just the most recent one I could find. What you're looking for is an abnormal amount of volume within an accumulation. So accumulation is shown as what I call like sandwiches, up and down, up and down. That's price accumulate, and it shoots up and then comes back to retest the accumulation. So instead of waiting for a confirmation like that break of structure, you can just use a touch of the volume cluster or the mini point of control or whatever you want to call it. So I'm just starting to introduce that now. It's working really well, and I'll show you every time it happens. If you don't find that, if it's like not obvious, then you have to use one of the confirmations that I set out. So break a structure and retest, something like that. Okay. The other thing is absorption. I think Alex did a really good description of it, but all absorption is a clash of buyers and sellers at a point of interest, say a key level or a support and resistance. It's where buyers and sellers clash, and it's like basically sellers are fighting to get past this level, and they fail, and you can see that in the price action with this pin bar. And then on footprint it lights up and it has abnormal volume, and then price moves away from it. Okay, that's all absorption is. It's like, you know, prices meandering down, and then sellers have to like increase their numbers and they get absorbed by buyers, and then price moves away. Now it looks different at different times, but that's basically the core of it. This was one that happened. You had this little supply zone, break a structure, retest, setup 2, and you had absorption. I don't know if you can see this very well, but you had like a clash of buyers and sellers at the top half of the candle. It was a down closed candle with positive delta, so that was absorption, and price moved away from it. So yeah. Sorry, I'm just very briefly just covering this because we've got to monitor our positions as well. Let's see, change windows. Brilliant. Yeah, so let's watch that very carefully. I basically covered the basics, and I'll just open it to Q&A now. I mean, we'll go into more, if you watch my videos, I'll go into a lot more detail on these setups. I don't do them every day, I do them on the kind of days of interest. But I try my best to show each setup and the logic behind it. There's only 3 setups and 3 confirmations, just to keep things simple. I used to have something, when Mitch joined me, I had like 8 setups and confirmations. Yeah, 100 and confirmations. It was like, well, you know, sometimes use them, sometimes don't. I got away with it for the most part, but sometimes I didn't. But I'd have things like, one of my setups was, let's say you just have an imbalance here that's like a 0.80. If price comes down to it, I would say, yeah, just buy off it. That's basically like a strong support and resistance. You know, that's the setup. No confirmation, come down, just buy it. And that'll work quite a lot of the time. But over time with this group, I just decided to simplify it and take the setups that were most profitable and most common. And it made my trading a lot better, just having 3 setups and 3 confirmations. And that's it. So I'm just going to open it to questions while we monitor what the hell is going on with this position as we enter New York Open in 10 minutes. So yeah, I know that was a very brief like overview, but really I just want people to ask questions, so fire away. If none of that made sense, that's fine. We can cover anything. So who's first? Mitch, ask me a question. Yeah. 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 Very, very important point that you made there. This is why I only use it for confirmation, so I have it running in the background. I've done my markups on pointer controls, and then all of my confirmations are footprint related, because they show you at a granular level where the support and resistance is, where the imbalances is, things like that. So you can see there's, you know, a support level here that's holding price because there was an imbalance in this candle. So that was the weekly pivot. Because it broke that, it created an imbalance, and that's now acting as support. So we've got 8 minutes till New York Open. But yeah, it's a very good point. You're only using the footprint at points of interest, supply and demand, trading levels, key levels, things like that. Really, your time should be spent learning the charts, learning the logic behind everything, you know, figuring out why we were moving down from here and not there, for example. You know, break above key level into supply zone, touch daily R1, perfect down, you know. So yeah, you're gonna get a lot more dividends from studying the charts than volume and footprint, but it's a very, very useful tool. For my first month using it, I found no value at all, and the more time I spent with it, the more value I got out of it, especially the footprint. The footprint was the only thing I used for a while, because all of the tools were like, this was all brand new to me. You know, if you're used to studying charts, if you say you're a smart money concepts trader and you're introduced to this stuff, it's like studying something brand new, and it can be a bit scary. And the only advice I can give you is stick with the charts, learn those, and just use the footprint for confirmations, and try and apply logic to things like absorption, where and when that's happening. Also, big limit orders. Let's say you have an abnormally large order pop up on the bid or ask side, depending if it's support or resistance, then you might interpret that as a large institutional order, for example. But yeah, it's worth studying and just gonna have it in the background. Don't obsess over it. Look at it at points of interest. In about 5 minutes, GU is gonna rocket. It's gonna go to the moon. So keep an eye on the footprint. Just see what the volume looks like. I see, for example, if anyone's got the footprint open, we just broke 16.0 imbalance. Good sign. So there it was. Sorry, my chart is a bloody mess at the moment because during the day I annotate a lot to show people things. And also to remind myself like where things are. Okay, we broke Asia low, we took out an M15 swing low, we took out Frankfurt low, we collected all this liquidity, even a trendline liquidity, and we're on this area of high confluence. So that's why I want to go long here, and also have a very long bias on GU at the moment. So and I kind of back that up with Dixie. So look at Dixie. Strong downtrend at the moment after a long distribution. I'll change it to the 30-minute chart, say. Hold on. So we had this distribution and now we're in a downtrend. And now it looks like, oh, we're breaking a trend line and now we're going to go into an uptrend. I doubt it. We've got this H4 FVG, which is also a kind of resistance level, so we'll see. We'll see. I mean, a lot of this is gut, but gut is just your experience, really, translated into the charts. So yeah, sorry, what was it, Mitch? Go on. Today we shorted here. If you don't remember, I traded your account short here, and now we're so what? So what? I know it's like a running joke that I only buy GU. But it's not true at all. Like I like selling, but I don't have any kind of like, you know, national pride in the pound or something. I only want to buy it. It's just yeah. I think it just became a kind of running joke that I only buy GU. But at the moment, I have a strong buy bias, and this is my level. So we'll see. We're gonna see in 3 minutes if I'm right or wrong. And we're currently in good profit. I do. Oh yeah. Well, we'll see. We're gonna find out. So any questions? We've got 3 minutes to go. Whoever's there must have some questions. Come on, fire them. Nobody's talking. Come on. Altman, fire a question. RG. Scotty, we haven't heard from you. Altman, okay, wait. Yeah, I can hear you, man. Yeah, I'm just aware we've only got 3 minutes to go. So change windows. Give me a second. What's spiked out? Okay. Wait. Mitch. So here we have a horizontal imbalance. Okay. Diagonal ones. Yeah. So this would be a diagonal imbalance, the one I'm pointing at, Mitch. So 0.15 bullish, perfect. And you can see it's kind of a support, and it kind of tries to break it, and then it holds. Yeah, I'm starting to gravitate to a diagonal. That's what Trader Dale teaches. It was Seb at the volume traders that taught us horizontal. I get that it is confusing to have both, because in my mind, they can't both be correct. You know, one of them has to be wrong. Okay, this is NYSE open. So watch it rocket. Okay. Okay. Yeah. Let's just watch this rocket for a little while and enjoy our profits. Ah, beautiful. Making use some good tendies here, Mitch. I'm basically trading Mitch's account, 10k, very conservatively. I'm not gambling. Oh. And you can see my... There we go. So this is why you come to cable traders. Because we predict these moves every single fucking day. And that's why, I don't know. I don't want to get too egotistical here, but... Now, here... What? Nah, partials are for weak people. Yeah. Partials. I used to go say like, okay, you know, I'd pick a point, like say this is like a little supply zone. I'd say, okay, we'll take a partial here. I just tend not to do it anymore. I'm like all or nothing. Yeah. Yeah. So we can watch Dixie just fall off the cliff now. Yeah, I got annoyed as hell. Yeah, is what I don't know. I'm like I'm a very like high conviction trader. If I have an idea, I'll set the take profit before I get in the position. If you do not do that, you'll be looking at your terminal. You'll be seeing the numbers go up and down. You'll get blown around by your emotions, and you'll be like, oh, like, you'll see a 4-figure sum or a 5-figure sum and be like, click take profit, and that's you destroying your edge by not following through and taking it to the logical place. So the logical, at least London high, at least. So yeah. Key level. We had several. So we had Frankfurt low, Asia low, and an M15 swing low. So I say in one of the videos, let's say you've got 3 or 4 key levels right next to each other. You don't trade the Frankfurt low because you've got this M15 swing low and Asia low, and they're all going to be hit too. And we've got trend line liquidity, and our trading level is this RBR, H1 rally base rally. Demand zone. Sorry, I just had a brain freeze there. Anyway, so Mitch, do you want to take profit on this just because it's a conservative account? Just like take a little profit, or I mean, I want to let this run. Okay. Well, I'm gonna hold my personal, but I'll close yours because we're running it fairly conservatively. That work? Okay, I mean, so my target was 5%. For this, I'm running it very conservatively, and we're at 8%. Okay. So that'll all be audited, my FX book, nothing to hide. You can see the mistakes, you can see the volatility, the gain to pain ratio, whatever you like, the information ratio. Actually, we need a benchmark if we're gonna have a proper information ratio, and I think a good benchmark, I think we can take the average of like hedge funds benchmark. We'll think about that today, because you can't just show performance and say, hey, I made 8%. It means nothing. You need to be comparing it to something. Say you're a global equities trader, right? And you trade large cap global equities, right? You have to compare it to a benchmark. Say it'll be the MSCI World Index or something like that. Just the broad market. So say the broad market just itself makes 5% in a year, and then you as a global equities trader makes 6%, then you've outperformed the market by 1%. But then you can dig into the stats and say, well, did this trader use higher risk to get those higher returns? Did he invest in more small caps, say, to get higher returns? You know, so you can start looking at things like Sharpe ratio or information ratio when you're comparing it to the benchmark. Because I'm saying I'm running this account conservatively, right? But I could be taking huge risks with it. You know, I'm just not telling you. So that's why my FX book will come in handy for that. There's another service that does benchmarking. They talk about it in Market Wizards. I just can't remember the name of it. Can anyone remember? Like, there's another kind of thing, alternative to my FX book. Yeah. Well, my FX book, that's the one everyone asks for, so that's what we're using. So anyway, I'm gonna run Mitch's account at 5% a week. We're currently at 8%, so that's it. That's cut off for the week. Ah, perfect. What did you make a trade? Did you make a trade, or is it just because? Ah, right, gotcha. I mean, I could tell you there's a very high likelihood we're gonna test this London high, but it's a risk. You know, I say things like this and then it just goes boom. I can't get it right all the time. If I did, I'd be you know, a multi-millionaire. I wouldn't have a group. I'd just be like, you know, trading in the Seychelles somewhere on a beach and just, you know, ignoring everyone. But I'm still on a journey. You know, I'm not a multi-millionaire yet. I'll tell you when I get there, but there's lots of steps on the way. You know, when you learn FX or any kind of trading, it's a journey, right? We always talk about the journey of trading, because you don't just pick up a strategy book or go to a mentor and okay, they say here's the strategy, go and apply it. It's impossible to just take somebody's strategy and go and make money straight away. It's just not possible, because there's lots of intricacies involved. You have to practice, you have to have confidence in it, and you know, I'm saying take profit level, you know, up here. Now let's say I took profit 10 pips or just 20 pips every single time, but my strike rate was only let's say I had stop losses of 10 pips or whatever. Let's say I took 10 pips every time, but my stop loss was 10 pips and my strike rate was 50%. Then I would not have an edge, because I'd be paying commissions, right? So your edge depends on you having a good RR and having a good strike rate, or the combination of those two have to work together to give you an edge. You can have an edge with a 20% strike rate if your RR is really good, or you can have a edge with a 5% strike rate if you have a really good RR average. But this is where confidence comes in. So I'm saying with confidence we're gonna go and break this London high. But I took profit early, so that damages my edge. So you have to consider position sizing very, very carefully, because when you look at your terminal and you see the money ticking up and down, it's like logic goes out the window, because you start to introduce stress. It's like, you know, your fight or flight is the, what do you call it, the sympathetic nervous system, okay? So you get stressed and you cannot think logically when you're stressed. It's been proven, they've done MRI scans, that the logical part of your brain, when you're in that fight or flight, it just turns off your logical part of your brain, because you're thinking, okay, I need to make a decision, you know, either run or stick with it. So you do not think logically about your edge and how you need to take profit at a good point. So position sizing comes into it a lot. And let's say you become comfortable with 20 lots, and then you get a prop account, you start trading 50 lots, then you're going to start taking profit earlier, because you're going to see the amount of money and you're going to be like, wow, that's really good, I'm going to just take profit there. But that's killing your edge, because you're not your edge depends on your risk to reward ratio and your strike rate, right? Does that make sense? Am I just rambling? Is anyone still here? Yeah. So yeah. I'm kind of going. Yeah. Hey, who's there? Hey, how you doing? Yeah. Okay. Spot is the over the counter market. You're literally trading with others in a decentralized market. Okay. Futures is centralized on an exchange, and you're actually trading a contract for delivery in the future. So let's say, you know, a delivery of GBP in May or whatever. Okay, so the prices are different because there's risk involved in delivering that that contract at a later date. So there are two different markets. The thing about trading spot is we don't have access to this granular data because it's a decentralized market. It's multiple exchanges. We just don't have any data on volume. What we can do is put an indicator on. How do you find these? Technicals, volume profile, fixed range. You can put this on. Right, and it'll give you a rough idea based on tick volume, and it'll say, okay, there's your point of control. But that's not based on the actual contracts exchange, because we don't know in the spot market because it's decentralized. So we have to go and look at the futures market. Now you can trade the futures market. It's a little bit harder. The barriers to entry are a little bit harder. I think you have to trade larger contract sizes. I'm not sure. I've never traded futures ever. I'm a pure like spot FX trader pretty much. So yeah, futures a futures contract is basically it's a derivative, which means a derivative is basically a contract that's derived from an actual thing. So let's say you have an oil future. Yeah, like an oil future for delivery on May, and you buy that. Then you have a contract for that person to deliver oil to you on that date. So people trade these, speculators trade these because you can use leverage with them. And there's all kinds of financial instruments, like we were talking about in the last video, LDI. Liability-driven investment, and how they will use a lot of derivatives, things like interest rate swaps, options, to try and emulate the liabilities of a pension fund. So I'm sorry, I'm going off in many tangents here, but a futures contract is a derivative that's based on an underlying asset. Spot is over the counter. We're literally just trading with other people. In theory, I think when you open a broker, let's say you open a broker and you put £1,000 in it, or you open a prop account. If you put a position on, I doubt highly that you're trading with another person. You're probably just trading the broker, and they are hedging their positions on the market. Let's say they're overexposed to the euro, then they'll just hedge it basically, and they'll, their money comes from the spreads essentially that you're paying, and the commissions. In theory, I think, maybe with larger, if you're trading huge spot contracts, then maybe you're trading with other people. But yeah, that's my interpretation of it anyway. Was that clear? Sorry, it was kind of a ramble. It's two different markets basically. Spot is easier to trade. It's easier to open a spot account, and that's the real price of GBP USD at the moment. Futures is a leverage contract based on GBP USD that's traded, but it's actually traded at a different price. It's two different markets. The reason we look at the futures market is because we can get this granular volume data, which we can't get in a decentralized spot market. Yeah. 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 Yeah, it was Alex. Yeah, absolutely. There's a guy in our group that trades FX futures, Rulero. I don't know what happened to him. He was quite active here. He was quite an interesting guy to talk to, but I need to get in contact with him, see where he's at. I think he was a kind of like one of those traders who just like travels around a lot and just trades when he needs to. But he traded futures only, so I found that very interesting. I don't even know how you would open a futures account. I don't know who does it. But there's no reason to. Like the reasons that Alex said, there's a lot more capital involved, less leverage. But we'll see. Look, we're having trouble with this trend line, but I have no doubt we're gonna fire through that. Dixie, look, come on, obviously this is so obvious to me that we're gonna come down and test this low of the day. In my opinion, I may be wrong. I closed Mitch's account down here because I have no balls. Yeah, because I'm gay. I closed it here, basically. Yeah. I said rocket time, but it's having trouble, isn't it? Let's have a look at the footprint, see what's going on. I see there's huge amount of volume being transacted. 623 on that candle 2 minutes ago. I think what you're gonna see as well. Let's look at the 1 minute chart. I'm really sorry about all these lines and stuff. It's just because when I'm sharing charts, I annotate, and then at the towards the end of the day, there's annotations everywhere, so it's a bloody mess. Lines everywhere, but they're important. For example, we broke yesterday's high and we shorted key level into a daily H4 supply, boom, setup 1, and we had this higher time frame trend line. Now, I'm not trading those. I'm not trading bounces off those, but I mark them up because they're very commonly manipulated. Okay, you'll quite often see price do a false breakout and then boom, straight down. So that kind of gives you extra confidence. I need to get rid of these bloody volume things. Anyway, I don't know. This rocket. Where's this rocket? Hang on, I know what to do. Where'd the rockets? Yeah, there we go. There we go. It should work. Usually this works. Come on. Okay, countdown. What was it, 2:51? It's a Friday. Yeah, Mitch, I made you 10%. That's double what I promised. Yeah, you could probably buy me a packet of crisps in London or something. Let's have a look. Yeah. So I'd be getting asked for like my FX book a lot, and I was reluctant to do it with my own financials. I don't really want to share what I'm doing with my own financials, but I'm quite happy to like attach a prop account, or say open a 10k or 100k account and share results. I've got no problem with that. There's that guy. I don't, one of the values of cable traders is positivity, so I don't want to badmouth others, but there was one guy in the group that was convinced that I was a professional scam artist and that other people were, complicit in this elaborate scam, and I was posting fake results, demo trading, posting on Instagram and stuff, and DMing everyone, so he had to go, unfortunately. So, but here's your it's actually not updated. Updates quite slowly, you know, 4 hours ago. So we'll keep posting that, and we'll try and work out something with copy trading. I don't know who, like, well, I talked to the FCA, and pretty much it was a no. They referred me to the FCA handbook, and I don't know if you've ever read the FCA handbook, but it makes absolutely no bloody sense. But essentially, it was a hard pass. So we're gonna have to work out something. I'm determined to make it work. But it has to be above board. It has to be legal. It has to be ethical. You know, I did CFA, and ethics is a big part of any kind of investment. You have to be very, very aware of who you're dealing with and what their risk tolerance is. If you go, say, promising returns, hey, I'm going to make you 10%, you know, or let's take an example. Recently, let's say I have an expert advisor, and I say to you, I'm going to double your account every month. That's unethical. That's not just unethical, that's illegal in the UK to say something, to make outlandish claims about growth results. You know, double your account every month. So it's, yeah, you have to be very careful, because the FSA didn't give a shit. Basically, you could do anything. When I started working in investment, it was FSA, and then 2008, global financial crisis, you know, bankers' bonuses, all that shit. Cracked down, so they abolished the FSA, and then it became the FCA, and you can't bloody do anything at all. Even when I'm working in investment, basically, senior managers had to sign off on me that I was a person of integrity, and I would have, like, even when I was employed, I would have separate interviews. I'd have the compliance guy come to me and question me about my integrity and things like this. And there's stories of, like, guys at BlackRock. There was a guy at BlackRock, a senior guy, you know, working in London, and he didn't pay his you know how in the London Underground you get different levels of payment, you know, like, I can't remember what it is, but there's, you know, level 1, level 2, level 3, whatever, and he wasn't paying the full amount for where he lives, and this came out, and he got struck off by the FCA because that showed he didn't have integrity. So yeah, so things like this we have to really consider. I can't just offer a copy trading service to you and say, hey, you know, 5% a week, join me, because there's ethics involved, and I just want to make sure that we do this properly. And I think people, yeah, signals are fine. Okay, that's allowed. But signal, here's rocket time. I told you. Yeah, my rockets worked. Hey, here we go. I told you it would work. This never fails. When I put rockets on, it does it. Now we're doing the biz. What? There we go. This is why you're with cable traders. What else was I gonna say? Yeah. If you're offering signals, FCA are fine with that. No problem. But if it's a direct copy, say I execute a trade, and then that's executing your account, that's portfolio management according to the FCA, and I as a company would need to be authorized by the FCA, which is a minimum 6-month process. Absolutely no guarantee that it would work. I'd probably have to pay you know, tens of thousands in fees to do it, you know, and with absolutely no guarantee. So I need to figure out something. Yeah. Yeah. So yeah, please, everyone, ask questions. Social trader tools. So if, let's say I use social trader tools and I go to you, Alex, and I say, hey, sign up to social trader tools and copy my trades. Then we're going against the FCA. It's illegal according to them. So anyone who's doing that is falling foul of FCA regulations in the UK. So if it, yeah. So I really want to do it. I mean, I'm used to managing money, not as a trader, but as just you know, a portfolio manager. So I have no problem. Like, that part of my brain of, you know, dealing with the ups and downs of trading is fine. I don't mind, and I'm very confident in my edge too. I think I've demonstrated it plenty, you know, plenty of times live. But the FCA won't allow it, so we need to find a way around it. Yeah. Anyone have any more questions on volume or anything else about trading? Yeah, well, I'm thinking I'm thinking of moving. Yeah. So yeah, anyone's free to contact me about this. I don't know if we can work out some kind of like private arrangement or something. I don't know. Yeah, I want to make sure it's above board and ethical, and you know, I only want to be dealing with people that I kind of know, not like know personally, but I've spoke to long enough to know that they know the risks involved. Yeah, vetted basically. I'm not gonna just put out an Instagram and say, hey, you know, copy trading, sign up here, boom. You know, I can get into serious trouble for that. I actually did put out an Instagram story saying copy trading coming soon without really thinking about it. Yeah. Yeah. Are you? You're back. Have you had your hair? Have you had your haircut? Good. Yeah. Good luck. I thought. Yeah. I thought you had I thought you had a wife or a girlfriend or something. Yeah, I told you rocket time. I told you where to buy, right? Or weekly pivot. Well, we had news here, and Mitch was all like, "Oh, this isn't gonna work. This is a bad position." Blah blah blah. And then I was like, "Nah, man, forget about it. It's rocket time." So there's 100 pips predicted perfectly, and I'm sure there's another 100 on the way. So yeah, yeah, buddy. GU. This is why I trade GU. Like, see if you, I don't know, put me on a different market. I'd probably like whenever I try different markets. Oh, by the way, yeah, but blow up. Seeing Euro. Like, I remember I was like, I'll try the Euro. Let's just give it a go. And I was kind of using the same logic, trading Euro as the GU, and I was like, I took a position, and it, by the time I'd made 6 pips on Euro, fucking GU flew 80 pips. It was like, why on earth am I trading Euro? This is a waste of my fucking time. I'll upload all this today. I mean, there's nothing you don't know, man. But yeah, it's all recorded. I'll upload it today. Plus the trade, execution. I'm trying to like, push back on the haters. I'm like, okay, well, if you don't believe me, I'll do my FX book. I'll record trades live. I'll do whatever you want. I don't really give a shit. But yeah, everything's recorded, OBS. So yeah. I can't remember what the confirmation was, to be honest with you. Let's have a look. Okay. It was this kind of like with this break of structure and retest, and then there's mini accumulation, and then away we go. We also had this kind of compression coming down, and I had very high conviction for a long on this level, and that just comes down to like trading experience and confidence. Yeah. You see this kind of displacement retest pattern quite a lot in GU. Ideally you want it to break structure. That's why we use footprint as zero side. Zero side imbalances means structure. Okay, you need to remember that, because this comes up time and time again. It's like, okay, oh, that imbalance got filled, so why are you still using it? It's like it's structure. It's support and resistance. You can still use it even after it's been filled. You can see here, comes down, retest the 17.0 level. It's still valid. So yeah, this guy. I did actually. I did. Basically I scaled in with Mitch's account because it's not my money. I don't really give a shit. It's just no, but basically I have a rule. If I position I moves, that's 30. Bloody hell, that's 34 pips. Anyway, I made my stop to break even after like 10 pips. Not in this condition though, because everything's exaggerated. I think because we're getting closer to parity. Everything's kind of exaggerated. So to grab, it seems to be easy to grab 100 pips now. 100 pippers used to be like, if I get one of those, I only had one of those last year. I won 100 pip trade and I was like over the bloody moon, and now it's like commonplace. So yeah, I'm not really sure the mechanics behind it, but it seems to be the way to go. And just make sure your stops are a bit wider, whatever. I think that's, well, I can't remember what. To be honest, I didn't put a stop loss on it. I had a mental stop loss, so I don't really know. I probably would have allowed it to come down 9 pips, something like that. I wouldn't, if it broke that low, I probably would have exited. So yeah, that's a good question. Why don't you enter here? But we were expecting inducements, right? And you kind of you want to wait for these fake moves. You can get involved in them, fine. Just make sure you're gonna take a lot of break evens trading intraday, because you're gonna get these like little fake moves to lure people in, because they need to. The market makers need to, like, you know, provide liquidity and fill their books up, so they'll make these little like fake moves. Anyway. Yeah. So you saw this equal low and you're like, no, I'm not getting involved. Okay. Yeah, I can understand that. I can understand that. I don't know. Like, there's a difference, you know, like, you can get overconfident sometimes trading, and you have to watch this. If you have a string of wins, you get a lot of dopamine in your brain. You know, it's a bit like snorting cocaine, right? You just turn into, like, you know, you think you can conquer the world, and now, like, just trade. All right, I'm a trading master now. I can trade wherever the fuck I want, and then you take a loss. So it's very important after a loss or a win. You know, when you take a break, just go do something completely different, like a hobby. Go do, you know, go whittle, you know, some wood or something. You know, wherever your hobby is. With do some whittling, or I don't know, you know, become a blacksmith and you know, get an anvil and just make a fucking axe or something. I don't know what hobbies. Well, no. It's very important that if you're an intraday FX trader, you have to have something else in your life that isn't trading. Because if this is all you do all day, every day, number one, it's going to be mentally taxing. Number two, you're going to get into trouble after losses and wins, because your brain is going to change in its balance of neurotransmitters, put it that way. And you're going to take unnecessary risks the more you win. And this is a classic thing for traders. Like, usually after a winning streak, traders tend to take a lot of losses after their winning streaks because they get overconfident. And I told you I had high confidence in this level, but now after I close this, I have to make sure I go and do something else. Go do some whittling, you know, go I don't know, go kayaking or something. I don't know, whatever. Anyway, any other questions? Yeah. Well, you don't need to trade again that week. It's the curse of having a group. I kind of have this subconscious, like, I need to produce trades for people or something. I don't know, like produce YouTube content or whatever. I have no idea. I don't really know what I'm doing with this group, to be honest. Well, yeah, I'm winging it, because I think I've told this story a few times before, but I started this group on Telegram with just some friends from Forex Factory about 2.5 years ago, and no commercial intention whatsoever. It was just like I found I was trading, and like I had no friends, you know, trading friends, so I just started a group, and I was like, you know, I needed people to talk to and just, you know, see what others are doing, how others are trading, share the ups and downs, and then eventually it kind of turned into what it is now. So yeah, but it will continue to evolve. We'll keep doing different things. I really want to get the copy trading off the ground, because I think that will give value to people and value to me, and it'll be like mutually beneficial. Yeah, but I don't know how I'm gonna do it, so don't know. We're between a rock and a hard place on that at the moment. It would have to be like friends and family arrangement. I don't know. Or I go offshore somewhere. I go to the Cayman Islands and just trade from there. Oh yeah? Was I present? Okay. Ah, yeah, I get you. So this seems to be something. Bit of a structure level. What is it? Huh. Anyway, sorry my charts are a mess. It's just over time when I'm like annotating, I have to write things all over my charts, so they're a bloody mess. But I try to provide clean charts as well. If you go to morning analysis, the first thing I post is the most powerful supply and demand zones of the day. And if you go to there's another page just under morning analysis, not evening analysis, it's like intra-session, what do I call it, cable charts updates. I'll try to post there more because things change throughout the day, because we actually had a demand zone develop. I think that turned into a demand zone because it broke this supply zone. But we can use logic to say maybe it wasn't the strongest demand zone in the world, but watch out just in case. Well done, Alex, for catching the whole short. By the way, I only caught like, I can't remember where I took profit. I think it was here or there or something. I just swoosed out. Yeah. 44. Ah, like, so fuck, man, you need to improve. You need to step up your game, son. That's not good enough. 44R. Get out of my group. Get out of my group. Anyway, does anyone have any more questions? I'm sorry, like, I've never done like webinar before, so all the screen sharing and stuff, if I do it again, it'll be a bit smoother. And of course, this was just a very basic introduction. I'm gonna be honest with you, I'm not a volume pro. I've only been studying volume for a year or so. I'm more of a price action guy. Price action, logic, mindset, psych. Yeah, volumes are a big part of it. I find it very, very useful. I like studying it, but it shouldn't, you know, like Mitch said, it shouldn't be something that you're just staring at all day, looking for the silver bullet. You're just not going to find it there. There are futures traders who will just trade the depth of market and the footprint. You know, maybe one day, but that's not my wheelhouse at the moment. I see people doing it on YouTube and it's really impressive, but yeah, I have no idea. You can actually get depth of market on cluster delta. It is there. I don't know how fast it is though, and I don't know. Yeah, because you see orders pop up and then disappear. What do they call them? Phantom orders or ghost orders or something. Yeah, you just end up confusing yourself, and to me the easiest way to trade is just to develop a story of where price is going, why it's doing what it's doing, and you know, we're mostly studying liquidity, right? I found the simplest way to trade is just with key levels, and be systematic about your trading. That, you know, we're discretionary traders, but we don't just fly into the market with our technical analysis knowledge and be like, all right, let's find a trade, because you'll definitely fail that way. You have to have some kind of systematic way of doing it so that you can judge if you're consistent over time, you know. Yeah, and if you're not systematic about your trading, if you're not following a rule set, then I think ultimately over time you're not going to succeed, and that's just the honest truth, unfortunately. You have to either follow or develop a system of your own, and practice the hell out of it if you want to be a successful trader. And I'll tell you, it's a pretty long journey. It's not easy. It's easy and difficult at the same time. Like, the analysis is fairly simple the way I set it out. I think the main battle is with yourself. It's taking stupid trades. It's having discipline breakdowns. It's yeah, you name it. The discipline breakdown or the revenge trading. You know, say you miss a big move and you just miss, or say you just got stopped out here and then the move goes and you're like, oh fuck, right, I'm gonna fade the top of it, you know, and you got stopped out again. It's stuff like that you have to watch out for. The mindset stuff. And I know I always bang on about this, but Jared Tendler's book, The Mental Game of Trading, I think that's a must read. To me, it's my favorite trading book, and it's you know, instead of like, what's the other one, Trading in the Zone, he describes all the issues, like, you know, very well, but he actually doesn't give any, like, well, how do you get around these things, you know, how do you actually solve it? And Jared Tendler's book, if you read it, he gives exercises to start identifying your weaknesses and ameliorating them. So I've been doing a lot of work on that. Like, my TP, taking profit, for me it's always been a struggle. Like, Mitch and Steve can attest to this. You know, I'd pull out these like 50 pip trades, then let them run to break even, like, all the time. So it was something I really needed to put a lot of work into. Yeah, and it's going to be different for everyone. Trading confidence, over trading, whatever it is, you need to map it out and figure out why you're doing what you're doing. But anyway, that's outside the scope of this webinar, so I think we'll wrap it up unless there's any more questions. Are we? Yeah, man. Alright, we'll do something like this again, and feel free to DM me, and yeah, let's make some money, and I hope you have a great... Yeah, I love it. Everyone seems to DM me at London Open. It's like, somebody DM'd me at London Open the other day, and he's like,